There's a whole load of nonsense on social media at the moment about 50-year mortgages versus 30 years and how much extra it's going to cost over the life of loan. The reason this is nonsense is because most people don't make the minimum repayments over the life of the loan. They gradually increase them over time, which will pay the loan off faster, and it doesn't really matter whether the original loan term was 30 years or 50 years. If you start putting more towards it, you're going to pay it off faster. Tip from me, always put half your income towards the mortgage, and you will typically knock the mortgage over in less than 20 years. The other element, I think, which is more serious, is could it boost borrowing capacity, which then leads to an increase in prices, which makes everyone's mortgage gets more expensive. It could. But in Australia, mortgages are assessed at 3% above the rate you're paying. And at that rate, the difference in repayments on a 30-year versus a 50-year mortgage is about 7%. So your borrowing power will only increase by about 7% as a result of a change like that if it came in. And that means if your borrowing capacity was $800,000, it's only going to go up to about $850,000. It's not going to suddenly turn into a $1.2 million debt because it's over 50 years. So don't panic. It's not in Australia, it's in America. They're even talking about this. And even if it happened here, it's not a big deal. Might ease a bit of pressure in the short term for some people. For most people, not an issue. Good luck. Have a great day. Thanks.